Let's continue talking about Walmart's Investor Day and the retailer's plans for the future. For that, we're joined by Arun Sundaram, a CFRA analyst. Arun, it's great to see you here. So Brooke just outlining some of the highlights, or from the headlines, I should say, from this Investor Day. Walmart saying that it sees a, quote, clear U.S. supply chain, also that its inventory is in better shape. We know that Walmart is obviously a consumer bellwether. What was your big takeaways from the Investor Day over the last 2 days?
Yeah, great question. Yeah, overall, we thought it was a positive and very upbeat presentation. I know our big takeaway is that I think Walmart is really entering a new phase now that the operating environment is starting to normalize. We're getting past the pandemic, supply chains are improving, inflation is coming down. So I think for Walmart, now they can focus on growing profitably and expanding margins as opposed to the grow at all costs model that it sort of deployed at the onset of the pandemic. And that's really what investors want to see. The investors want to see not just good top line growth, but also margin expansion. During this presentation, Walmart said they're going to expand profits, grow profits at a faster pace than sales growth, meaning margin expansion. And that's largely going to come from automation, more automation within its distribution centers, more automation at its stores. It's also going to come from cutting costs in different parts of its business, and also going to come from these alternative profit streams or all these alternative businesses. Everyone knows Walmart as a core retailer, but Walmart's becoming more than just a retailer. It's becoming an advertiser. It sells data. It's doing third-party fulfillment services as its online marketplace grows. It's getting bigger in healthcare, financial services. These are much higher margin business streams than retail, and that's going to help Walmart grow its operating margins over the long term.
Arun, your comments there on automation, that also stuck out to me because some of the estimations here, Walmart saying that they expect 65% of their stores by 2026 to be serviced by automation, a majority of their fulfillment centers. We know what you think that's going to potentially do here to margins. What is that going to do, though, to the hiring picture and what the employee headcount could potentially look like at Walmart going forward?
Yeah, interestingly, Walmart said that although they're going to deploy more automation within its stores and fulfillment centers, that it expects its headcount to be stable to slightly up, and it's also expecting wages to be up, meaning, a lot of these, lower level jobs might be cut, but, they'll redirect those employees to other jobs that require less manual labor. So they're expecting also to increase employee retention, now that, less strenuous jobs, less manual labor, and more of those higher paying jobs will be there. So interestingly enough, they do expect to have a stable headcount or slightly higher headcount, even though they're deploying all this automation.
Arun, how big of a factor are labor costs right now? Is that still a pressure point here for Walmart?
Yeah, that's been a pressure point for several years, and it's going to be another pressure point for this year. It was just a few months ago, Walmart announced that they're increasing wages for their U.S. associates this year. I believe the average hourly wage will now be over $17.50, and the minimum wage is now $14 an hour for their store employees. And they're also increasing benefits for their store employees, things like expanded healthcare coverage, tuition reimbursement, things like that. But I think the good news is that although wage pressures continue to exist, it's probably going to be less of a headwind this year than it was the past few years. I think that it's slowly becoming less of a headwind, but albeit, it still is a headwind.
Arun, what's the one thing that you think Walmart needs to do to succeed and help maybe widen that gap or stay ahead of some of its rivals out there?
Yeah, I think it's really about it becoming a true omni-channel retailer. Many people still only shop inside Walmart stores, inside their physical stores. But now they're really, doubling down on both their in-store business and their online business. For their online business, they don't want to be just a first-party marketplace. They also want to be a large third-party marketplace, similar to an Amazon. And they're really trying to, they're kind of copying Amazon's playbook in that regard and trying to expand their online marketplace. They also introduced a subscription-based program called Walmart Plus. They're trying to attract more higher income affluent customers to that subscription model, similar to Amazon's Prime model. And I think as they grow this online marketplace, that'll bode well for both their in-store sales, their online sales, and also these alternative profit streams that I was talking about before. The more sellers they attract to their online business, the more buyers they attract to their online business, then the more likely advertisers are going to want to advertise on Walmart.com. That's a way I think they're going to grow margins over the long term.
Arun Sundaram, always great to have you. CFRA, thanks so much. Walmart shares up just about 1.5% on the day.